TheoTrade. This is Don Kaufman. October 26, 2020. 17 minutes to go to the cash close on this Monday afternoon with risk just coming roaring back into the marketplace. We start this evening's video in a very unlikely place, and that is the VVIX, better known as the volatility of the volatility index, taking off to the upside like there is no tomorrow. In fact, all of your volatility indications have exploded. You know, the other one that I really want to detail, and again, very unlikely place to kind of kick off an evening video here, is right now we're looking at the VIX 9-day. For those of you that have never actually pulled up this particular symbol, it is the VIX 9D, right? The 9-day VIX takes off by the tune of almost 50%. So short term, which is 9-day volatility, and the way that they actually calculate 9-day volatility, if we were to actually cruise over to the SPX, the mother of all products, and we're going to look at that again momentarily, you pull this up, what it's actually doing is giving you literally like an average or a 9-day VIX, and it just took off to the upside here. Literally explodes up by the tune of almost 50% in literally out of the gate this morning, obviously with the marketplace seeing some sell side activity, but it's everywhere. You know, you talk about like risk on and risk off assets, all of the volatility products through and through are bid up. Even the 3-month volatility game, the VVIX, you know, on this past weekend I was talking about, hey, you know, if everybody's hedged, then where's the risk? And what I was actually displaying was that people were not necessarily hedged and that there was still an extraordinary amount of risk. Well, what a difference a trading session can make, because now we're starting to price in some serious risk. As I was saying a moment ago, you know, risk on, risk off assets. Take a look at the bond market. In the bond market, I was talking about this as well in the weekend video and had more questions than answers. I was like, it's selling off. It doesn't seem to make much sense to me. Explodes back to the upside, specifically up a full point today, and does it on some decent sized volume. Short-term volatility futures. The volatility futures, you know, people talk about contango and backwardation. Listen, you expect right now that the volatility futures, I'm going to highlight precisely what you should be kind of looking at with me here. You would expect right now that the volatility futures would be inverted, and they are inverted. Obviously, we have a huge binary event. The election is coming up, but I'm going to tell you something. This one kind of surprises me. And I'm going to tell you exactly why it surprises me. So we've actually talked about the election pretty extensively in some of the recent videos that we've done. One of the things that surprises me is this short-term volatility future only has 23 days left to live. And it is, well, almost a full point over the 51-day. And we've also determined by looking at markets previously that very likely the election results weren't even going to come out to December. So the marketplace right now, what it's kind of detailing and dictating to you is that the risk is really compounding. It's growing big time inside of the next 23 days. So then I cruised over to, once again, we're going to look at the SPX, close up this left side bar, and kind of highlight some of the coming expirations in here. And I want to show you something again that I find very interesting. Risk, okay, just ripped for the election. I mean, it took off people to the upside and took off to a very, very large extent. If you take a look specifically at, okay, the November 4th and November 6th expiration versus, for instance, November 2nd. November 2nd, nothing's happening, okay? November 4th, obviously, you know, the election is already happening, okay? And by November 6th, that now is the peak in volatility. It's a massive shift in skew inside of what? Today's trading session. And that's why I'm saying risk is, it's just coming roaring back into the marketplace in every way, shape, or form. Now, there's also some unexplained things. You start looking at the back month volatility here. It's still elevated. That necessarily is explainable, but what's the unexplained side of this? This actually deals with some of the equity products today. When I'm talking about equity products, all right, and here's some big questions. You know, people are going to give, you know, 50 different reasons the marketplace sold off today. You could probably talk about the COVID numbers, right? So let's start with the COVID numbers. They're horrific. Yeah, but the last time the COVID numbers spiked, okay, did you see the likes, okay, of a Microsoft or you know, a Facebook getting hit, possibly an Amazon? Absolutely not. Google getting hit? No. These were actually huge winners, right? The point that I'm trying to make over here is you have a number of key underlyings, Microsoft being one of them, that have earnings coming out, well, in the case of Microsoft, tomorrow. Let's actually move away from tech for a second to Caterpillar. Caterpillar's earnings come out tomorrow morning. Why are they getting hit right now? Okay. Why are we actually taking, a big hit in a number, again, of key underlyings that are coming out with earnings in very, very short order? This is not per se, a COVID type trade going on. So then you could talk about stimulus till you're blue in the face. But again, the stimulus deal wasn't necessarily going to have, and the stimulus deal is probably not going to have, wasn't necessarily going to have dire effects against a Microsoft or a Facebook. Then you're going to throw out the idea of antitrust. But, the antitrust suits, people, those are already in the works. Like I can go on here for an hour about all the different news announcements that came out. Here, we give you a blanket statement. We saw some heavy sell-side activity across the board. There's nowhere to hide. This is what we kind of call a full court press. And this is the opportunity that we needed. Okay, roll, baby, roll. I had just in the thinkorswim account today over 30 fills. Now, you know what? I'm not sitting here scalping futures contracts back and forth. All right, I'm actually looking and I'm just firing off, one lot's like a madman, rolling out positions. If you have duration style positions on, and I'm actually going to flip to a separate account here, but if you have duration style positions on, roll them when you can. All right, you need to lock in some of the P&L, and I've got duration positions in a multitude of different accounts. Lock in the P&L. Roll those positions when it's advantageous, and this is the first decent-sized down move we've had. So any of the bearish duration positions that I've got on, okay, I am rolling those, and I'm getting fierce in terms of trying to get them filled as the day actually wears on. Now, one thing we hadn't done very much of in this evening's video, I haven't really looked too much at the S&Ps, right? So why? Because I'll tell you right now, the S&Ps, it's not about the S&Ps at all. Okay, the S&Ps, it's all about the SPX and the edge of the expected move. One of the things that I wanted to make very apparent in today's sell-side activity, the sell-side activity is all about this level on your screen right here, okay? What is that particular level? So as I actually zoom in and I'll put my mouse on it, it's right around, okay, the 33, and again, the 33.87 level, the 33.87 level, and we start to actually go then into an intraday chart. Now I've just actually zoomed into a 1 day, 1 minute. All that we've done in today's trading session, okay, is we started, okay, from obviously where we left off last Friday. We gap a little bit lower. We drove to the edge of the expected move. We broke off the edge of the expected move. All we're doing, okay, the remainder of this trading session has been chopping around the edge of the expected move. Nothing more, nothing less. We're just chopping the expected move. And this is where people start to, oh, it's this level, it's that level. Listen, the only level, okay, that we need to even be concerned about right now is the lower edge of the expected move in the SPX. And effectively, come on, we're sitting on it right now. I mean, we're literally sitting on it. It's about 33.87, and we're sitting on it, and we're likely to close, all right, with 9 minutes left in the trading session right on it. The reason that I didn't cover the levels, and again, I wanted to cover a little bit more about the volatility expansion, the fact that some very marquee underlyings are selling off in light of everything that, they have earnings coming. They're not going to move before earnings. They're getting whacked before earnings. Again, very, very unusual. And it's not just specifically into tech. I mean, you can also probably cover a little bit about like Boeing in here took a hit. Instead, I decided to go with something like Caterpillar. There's some pretty fierce sell side activity going on. But when it all comes down to it, all right, what you need to focus on for the remainder of this week is the edge of the expected move. Because if we lose it, it's a lower probability, but if we lose it, things are going to get downright wicked. The volatility right now is already spiking. What that effectively means is that a lot of professionals, now things are in play. Now we're ready to rock. And what I'm saying about the edge of the expected move, that's the 33, again, 87. If we lose it and we head lower from here, that's when you start to get 2, even like 3 sigma type moves. The higher probability is to always close inside of the expected move. Okay, the expected move this particular week is just shy of about 80 points. And that's when you're looking for like an $80 move higher, $80 move lower. Again, we're almost there right now, right? We're pretty much on it, in terms of the expected move. But You could even see a 3 sigma move this week. And again, even though that's a lower probability, and that's always going to be a lower probability, why am I actually giving you a little bit of a warning shot of it right now? The reason I am warning it of this particular move is because the volatility has already taken off to the upside. Okay, the bonds have taken off to the upside. The dollar all of a sudden is rallying. So you talk about risk on and risk off assets. Big money right now is already running for the hills, and I think that increases the odds, if you will, of a break of expected move. You start to look at things like financials and take a look at financials in terms of expected move. They're on the bottom edge of the expected move. You look at the IWM. IWM took a big hit. It too is on the bottom edge of the expected move. Okay, the Nasdaq, here's the interesting irony. The Nasdaq is the outperformer of today's trading session. And if there's going to be more sell side activity this week, people, you're going to look to the Nasdaq for that sell side activity to be persistent, because again, the Nasdaq is the outperformer, okay, of today's trading session. Listen, there's a huge amount to obviously think about, but keep that key level in mind. And again, that key level, that 33.87, if we start to lose it, okay, it's going to be absolutely wicked volatility for the remainder of the week. So keep your hands and feet inside of the vehicle at all times. Obviously, there's a huge amount of earnings, but to me, earnings, that isn't necessarily what's center stage. Right now, this is a completely binary event after binary event, news announcements coming out. The marketplace, as I said, risk just came roaring back in. Thanks, everybody, for joining us here at TheoTrade. Have a wonderful evening. Bye-bye.